talking about a really cool topic that I think can make a serious impact in your business. We're going to dive in to how to integrate machine learning and financial engineering into the finance world. So with us today is Peter Millington. Now, he is an avid participant in fintech and the application of cutting edge technologies to the financial industry. Now, Peter spent over 25 years working in quantitative finance and founded Scientific Financial Systems in 2016 to advance the state of the art of data science, big data, and machine learning in asset management. Now, Peter is an avid participant in fintech and the application. And he's also spent over 25 years in quantitative finance. I don't even know what I'm saying anymore. Peter, I think I messed the whole thing up. I think I said the same thing twice, but welcome to the show today. I'm really glad you could join me.
Thanks, Ty. Thanks for having me.
So 25 years of quantitative finance, and yeah, you founded your company 2016, man. So congrats, you've done a lot in the industry.
Thank you. Yeah, it's been an interesting ride. I've really had a great experience. I studied engineering in school and worked in defense for 4 years and did a career change in the mid 90s. Went over to Fidelity Investments and was hired as a quant analyst and became a quantitative fund manager and a director of research. And it's been a great experience.
I love the topic today because machine learning has made a major impact on what we're doing right now. The predictive stuff that we're able to just start testing, it's kind of insane. But I want everybody to know when we talk about machine learning in general, what are we referencing?
So really, there's a lot of different techniques that have been developed, over the years, and it's really blossoming though more recently, thanks to the growth in computing and resources, and it's the cost coming down as well of data storage costs, et cetera. So I really feel like machine learning and AI is, over the last 10 to 15 years, it's really kind of grown by leaps and bounds. There was a lot of stops and starts over the, in the 60s and 70s trying to get it off the ground, but now it's really happening. And finance practitioners have always been on the cutting edge of, applying the latest technology and statistics and, analytics, and so that's really, it's very exciting. It's all happening now. And, we're right in the thick of it. And we're very excited about, what we're doing here at Scientific Financial.
So give me some examples of how you're seeing, this make an actual impact in the industry.
Yeah. So there's just, generally speaking, there's just so much information, proliferation of information, and just comes out so rapidly. It's becoming really impossible for investors to just stay on top of that information flow in the traditional sense by just making judgment and kind of qualitative, decision making. And so firms have really felt, a requirement to adopt these techniques and build out these capabilities. So really, it's about taking a lot of these techniques and also leveraging a lot of the new data that's coming out, thanks to just the data information and the internet and just the adoption of data collection, et cetera, and marriage of those two, the techniques and the data, is really opening a lot of possibilities. So, a lot of times it comes down to, figuring out which data is helpful to you, what is predictive and what is noise, right? And then leveraging that, trying to adopt the latest things so you're ahead of your competitors, but also identifying patterns and opportunities in the marketplace. And so machine learning techniques are oftentimes better than humans at that. So, identifying kind of some obscure relationships, some nonlinear relationships, maybe some time varying relationships between the data and what's happening in the marketplace. So that's where it gets very exciting, is when you can explore and experiment, and also hypothesize about, how the markets could work and how you can leverage these techniques to your advantage.
So that's at a pretty big level. And let me ask you if this is what you consider to be machine learning. So we got an analytics team, and it tells us, of course, when people default on payments, right?
Right.
So they actually used machine learning, and we're able to come in and actually predict when people are going to default on payments with like 90% precision. So I know how they do it. It's magic or fairy dust. I'm not exactly sure which one of it is. I know it's either magic or fairy dust. I don't know which, maybe both, but they did it. And 90% of these likelihood of default, I mean, 90% accuracy. So then it's kind of crazy because we were able to then go back to these people and then be able to then offer them something like a different kind of financing option. And like that weekend, we did like 60,000 in sales from people that had a 90% likelihood of going away, stopping payments, never being talked to again. We started to bring in a ton of cash and we've continued that on. Is that kind of a really minor example of what you're talking about with machine learning?
I think that's a very great tangible example. And a lot of it's about, businesses controlling their risk, right? And being more informed so they can make better business decisions. For example, when I use my credit card, sometimes I worry about, well, I don't want to use it certain places that I'm not so sure that the information will be, treated carefully. But, at the same time, you get a peace of mind these days that, there's very sophisticated algorithms now, at the credit card companies, for example, that are very good about identifying fraud, right? It really does help their businesses, and it helps the economy as a whole, and it helps the consumers as well. And so, yeah, I think your example is a very good example of that. And we, there's so many ways that financial, investors actually look to leverage those sort of opportunities, using techniques. So, yeah.
And that's something that a lot of our clients and our listeners get trapped into, is that they're seen as fraud because of the antiquated systems that look at things that put them in a fraud category when they're not, like the Secretary of State record doesn't match exactly on the application. So how are you seeing the machine learning, the financial engineering, how are you seeing all this apply to be able to still keep the lenders and credit issuers as safe as they can to prevent fraud, but still make it easier for business owners and consumers to be able to get the credit financing and not fall into that fraud trap when it's really not fraud?
Yeah, I think, as you said, if there's relevant information that actually, can be helpful and predictive, I think their techniques are there that will find those and kind of will work in the consumer's favor when they need to. In the financial markets, we adopt a lot of these techniques. Our problem is, a little bit different than the consumer problem, in the sense that what we often do is we look at historical data and we look at how, if and where there are relationships between the historical behavior of the markets and that information. And, hopefully it's causal. And when it's causal, it's repeatable. And when it's repeatable, you can exploit it going forward, right? So a lot of times we look at historical relationships, but it isn't, it is very similar to what credit card companies might do. For example, they're looking at, the chances of fraud, the chances of default, et cetera. And, and there are those techniques that are being used in the markets more formally as well.
What are you seeing do you play at a really big level, or do you help more along the small, mid-size, or the enterprise level? Like, what size of businesses do you typically work with?
So our firm, we have some software and analysis tools that we sell into the investment management industry. Our customers tend to be larger firms, medium to larger firms. They have fairly large budgets, and a lot of it has to do with buying the technology, but also being able to afford, the staff to do that analysis, but also buying the data. Some of the data is not expensive, but some of the data can be quite expensive. So some of these firms actually do spend a lot of money on these initiatives, but at the same time, these resources are quite expensive. They hire, PhDs in finance and, math and physics. And they pay them very well, especially when they can, demonstrate that they can bring value to the table. So, but they want to make sure they get the best out of these people and make sure that they're doing the work that is the value added work, not the busy work of managing the data, and kind of getting the data to work with the algorithms. They want those people to be creative and to work efficiently. So our tools help those companies to apply these techniques more efficiently and more effectively in the marketplace. And it's been helped by the fact that, I and several people on our staff actually worked on the buy side for a number of years as practitioners before we started this company. So that's very helpful that we have kind of an intimate understanding of, how these things are used in practice. And also when we go in and speak to a prospective client, we know exactly the type of problems that they're, struggling with.
What about artificial intelligence? Where does artificial intelligence come in? Because this is getting thrown around everywhere. Everybody says AI. And I don't know. I'll be honest with you. A lot of times people say it's AI. It doesn't really seem like it's AI.
Well,
So,
yeah.
like, what's the deal? How's
Yeah.
AI tied all this?
Yeah, I mean, again, I think there's a lot of innovation in finance that you don't hear about because people like to keep it a secret, right? Especially in the hedge fund world, if you have some, profitable strategy using AI, you won't really tell anyone about it. There's a lot of very rich people that have gotten rich very quietly because they don't always share their secrets. But there's a lot going on in natural language processing whereby machines are reading text and reading social media, but making sense of it. It's a very hard problem to know what the gist of an article or a post is, right? Because you have to not only kind of know is this positive or negative, but also how does it relate to a given industry? How does it relate to given companies? How is it actionable? Those are very hard problems, but machines are getting very good at actually reading those. And obviously, there's a lot of information that comes out very quickly. If you can read that and react on that more quickly, humans can't keep up with kind of the traditional kind of reading and thinking, and picking up a phone, right? It's just, so these techniques are being embraced out of necessity, but that's one of the many examples. There's also some other examples whereby, firms are using image processing, they're, processing kind of pictures, satellite data, for example, and now obviously there's a lot of traffic, cameras, et cetera, and you can kind of actually, read into real time what's going on, in the economy and what's going on in certain cities that might actually give trading opportunities for certain stocks or industries, right? And those are just, information that, traditionally you had to wait weeks or months to get a heads up on. These are all happening in real time now, so it's very exciting.
What about banks? How are banks using machine learning?
Yeah, so I think there's obviously investment arms at banks and asset allocation, but a lot of them, as you said, consumer oriented, loans, and also looking at companies that are applying for loans and looking at their business and looking at the risk, for example, where the real estate development they're doing is in, and what's the associated risk with that. There's a lot of that being applied in the banking industry on the consumer level and the business level. We actually do a lot of work with the public markets, but definitely these AI techniques and machine learning techniques are being used across the board. So.
You see, what are some of the advantages that we haven't already talked about with what machine learning does, like in the general finance sector?
Yeah, so I think really it's identifying patterns, but at the same time, I did want to mention that it's also it's not an easy art form because you have to use it responsibly because you can't and you should not just follow an AI technique blindly. There's traditionally been this possibility or risk of data mining, finding relationships that aren't really causal, they're just noise. Sometimes machine learning techniques are very prone to, being susceptible to that. So a lot of times there has to be some judgment that's deployed alongside of these techniques by, someone with experience in the markets to say, okay, does this make sense generally? Does this investment strategy does it seem logical, right? Because you don't want to have a black box, right, that you follow blindly. That those can end badly. In the sense of if you don't understand what your investment system or your machine learning system is doing, what it generally is based on, it can go awry, and then a lot of times you don't know, if and when to pull the plug or explain to your investors what might have gone wrong, right? So it's a bit tricky to balance, the tool that might lead you to some insights, but at the same time, using some judgment and also, validation of the model to make sure that, it also is sound and defensible.
You talked a little bit about social media.
Yeah.
How is machine learning kind of tying into what's happening and using social media data?
Yeah, so there's a lot of posts. Obviously, there's a lot of reviews that get posted on products, for example, and some of that's noisy, but some of it you can pick up trends, right? And a lot of these companies have realized that they can monetize that information, right? And And it could be things like, gasoline purchases, and hedge funds will go and buy that data from these different vendors, and they're able to augment their revenue stream. But at the same time, say these investors will actually get, some advanced notice on these trends. It could be utility usage, that might portend what's happening with utility prices or commodity prices. And so there's a lot of different examples as to how this information from social media can actually end up being a good predictor of the markets, just given, how, there could be, for example, if there's a new product out and, people are upset because they can't buy it because all the stores are sold out. Well, supply chain issue, right? That, obviously machine learning techniques could probably pick up more quickly than other people that are reading these manually. So that's just, the social media environment is a very rich environment if used properly to really get immediate feedback on some issues that might impact stock price.
What about financial engineering? Well, give me some background. Like when we talk about financial engineering, what are we referring to?
Yeah, it's really the whole process of managing investment portfolios. And there's kind of a very large academic community that publishes papers, but at the end of the day, building models that make security predictions, or let's just say stock predictions, but then taking that and actually, creating an investment portfolio, and then, with some consideration of risk and some consideration of customers' investment mandates, and putting that whole package together, running it kind of in a responsible way, such that you can explain to your investors what's happening in their portfolio. And maybe one quarter was a great quarter, and another quarter wasn't so good, but you want to be able to have that information, that whole exercise of managing that process, managing the risk, using all the respective tools, making sure that you have the right kind of perspectives on everything. That's kind of the financial engineering. There's also kind of a lot of interesting things with respect to using different markets and information from different markets. Say, looking at the bond market, sometimes they can give you information on equities and vice versa. There's a lot of financial engineering around, trying to look at asset prices and how they actually are set and how they actually can be used, from one context to another. So that's kind of the whole financial engineering, is a lot about portfolio management, risk management, an operation of running, strategies, and also, managing your trading costs as well.
So that being said, what do you think we're going towards in the future? Like, what is this going to look like? With machine learning, with AI, with financial engineering, when we look at all this, like, where's the future taking us?
I think it's getting more and more difficult, to deploy in traditional strategies. I think just as you see kind of robotics coming into other industries, it's the same in finance. So I think it's going to become, it already has become very rapid dissemination of information, escalation of technologies and infrastructures. I think it will be more and more automated. I think, it will potentially be better, but at the same time, we need to make sure that we understand how these systems interact at this very high, rapid pace that, really is too rapid for humans to actually to stay on top of sometimes. So I think we're going to just see an extension of this, as AI kind of evolves. There are going to be some dominant players, the early adopters, and I think, some of the bigger hedge funds are getting very large, because when you have these advantages, you really can really deploy and actually outperform your peers. So I think you're going to continue to see, concentration of some larger managers that, are good at these technologies, and, perhaps just fewer players in the space that are like pioneers. But I think, hopefully, if it's done carefully, the markets will be more efficient and they will benefit, society in general. But, there are a lot of unknowns with respect to, how these things will play out and how the risks will be managed, and et cetera. So it's very interesting. It's a really good question. I think there's some question marks as to how it's going to play out over the next 10 to 20 years.
Know who to trust in this, because it seems like I come across so many gurus, right, that pop in and have a solution to predict which cryptocurrency is going to perform and which one's going to be one of the 2 or 3 that may make it through, right? I mean, I think like when cars were created, it was like 1,800, different brands. I'm like, only if you make it through, right? And now there's like 19,000 cryptocurrencies. There's people out there that say that their algorithms, their machine learning can predict the likelihood of that. Or the same with picking stocks, right? I mean, sure, you're in the world, so you have to see it too. So we all see it. We don't know anything to have the education that you see. So how do we know who legitimately has stuff that works versus the ones that just, that don't?
It's a great question. And I would say it's good to be skeptical. And ultimately the results have to speak for themselves, right? I sometimes find it surprising in the finance industry that there are a lot of opinions that get offered, but there's not always a lot of tracking of, how accurate a certain person might have been historically. They might be highly educated and they might say very logical things, but it doesn't mean that, their suggestions or recommendations always play out and they actually have a better track record than average, right? So we don't always do in the finance industry, we don't always do the best job of keeping track of, if somebody is, adding value, if there's somebody that you should listen to or not listen to, right? There's a lot of managers out there that, don't beat the market on average, right? So I think at the end of the day, it's hard to know who to listen to. And, I think you have to really fall back to, okay, does somebody have, capability that, they've shown that they actually, their opinions or views, have shown to actually played out, more accurately, in the past. So, because again, there's a lot of smart people, they're all very intelligent and well read, right? It doesn't mean that you should follow or take their advice, because these are very hard problems, right? So it's not always easy to know. So I guess one thought would be that, have some skepticism around, there's a lot of great ideas, and, even great ideas don't always kind of work well in practice, right? So that's what I would be. It's very hard to know, right? And so look at someone's track record, and, and then also just be open-minded, because there's probably not going to be just one person out there that figures it out, right? So,
I'm interested with all the data you deal with. How do you even begin to know like what data can be useful and what probably isn't?
Yeah, so that's, as I mentioned earlier, it's a little bit of an art form, right? You want to bring your experience to the table. You want to bring your ideas to the table. So in an ideal world, you can hypothesize about what you believe is, drives stock prices, but also use these techniques to confirm or explore or to have your eyes opened, but not to follow blindly, right? So I think at the end of the day, you do want to explore, there's a lot of new data sets that, might be helpful. There's a lot of like going on with ESG today, and that's, economic, social, and governance data, right? And whether or not that it certainly is good for society in general to embrace those practices in the business world, whether or not, that how it can be used in the investment world is still playing out, right? So, but, there's a lot of attention to those data sets. There's a lot of attention to, like I said, social media. So I think you have to explore, you will find things that are valuable, you will find things that where you didn't expect to find value, right? A lot of times too, it's not just what the data is, but it's how you use it. You can normalize it to identify, take away certain effects that you're not interested in or you think are not, influential, and to accentuate some of the things that might be more subtle, but because they're more subtle, they haven't necessarily been noticed or embraced or arbitraged yet. And so it's also has to do with how you actually look at the data, how you adjust the data, et cetera. So it is a bit of an art form, back to your question. But at the end of the day, I think what firms look to do is look through as much data as they can. And the name of that game is actually getting your hands on the data, but also getting it running it through your analysis. And that tends to be very time consuming. That's part of the problem that we look to help people solve, is to have a quicker turnaround time from finding a data set and analyzing a data set and making decisions on how and if they can use that data set. That traditionally has been very time consuming. So we're helping companies with the problem of turning it around more quickly, right? So they can actually look at more things and explore more things.
You have a product, I don't know if I'm pronouncing it correctly.
Yeah.
I think it's Quotient.
That's right. Yeah.
So Quotient, what does Quotient do?
So it's a pretty, elaborate kind of platform that we built based on our experiences. We've been working on it, for a number of years. It utilizes at the core Python, which has now become the kind of standard, data science kind of language. But we've implemented a lot of algorithms, including machine learning techniques, and a lot of connections, and to integrate data quickly. And then we have a front end. So there's a front end browser. You can access our application and the analytics from just any web browser, that will speak to a server on the back end, which, may be in the cloud. So there's a lot of flexibility as to how it's deployed. But at the end of the day, we've written a lot of back end code to do analysis of data and massage and manage the data, so that, you can bring data together and analyze it kind of one cohesive unit. A lot of times these exercises are all around, not just finding one insight, but finding a number of insights and encapsulated them into an investment strategy. And that's what we help people do, is to explore, but also integrate and be, have a strategy that is informed on a number of different levels. And so that's what our platform does. There's a lot of different aspects to it. We bring some analytical modules to the table, so people can do, some very flexible analytics with drag and drop and front end kind of, menus and controls. So that's just, a tool that helps people more quickly turn around analysis and turn around data integration.
Peter, it's been great having you on. I mean, very enlightening. You're a really, really smart guy. Where can everybody that's listening and watching today, where can they go to learn more?
Thanks. So the industry is growing. We're very excited to be part of it. So our website is sifinsys.com. It's SCIFINSYS.com. There's a lot of information there and links. We post blogs weekly, and we do a lot of research, but we're working with customers in the financial industry to stay on top of the latest trends. So they can also drop us a line. My email is pete@sifinsys.com, info@sifinsys.com. There's demos on our website, and if there's companies out there would like to have a look at our product, they can look at some of the material on site, and we're happy to give them a demo of our product as well. So thank you for having me on the show. It's really a great opportunity to be involved, and and I know you have a lot of great topics on your show. We're really excited to have a chance to talk about our company.
Yeah, I appreciate it. Peter, again, thanks for coming on.
Of course. Thanks so much, Ty. Great to meet you.
Same here. So listen, if you're watching or listening to this, man, this is the future. I mean, machine learning really is the future of where we're going. It's not, there's so much data becoming available right now that the problem is it's overwhelming. If you can't use that data precisely to be able to make smart decisions, and it's just useless. And that's really tough to do. It takes really smart people to do it. And that's exactly what Peter and his company do. So first of all, if you are a medium, enterprise sized business, you really want to look into what these guys have. It's phenomenal. And there's a ton of information on their website, which is sifinsys.com. And they're including a blog with all kinds of information about Quotient, amongst many other things, and the things you need to know about machine learning. Even if you're not yet to the medium enterprise level, you still should go here and check this out, because this really taps into what's happening right now and what's happening even into the future with machine learning. And a lot of this is going to be applicable to your business. So you can either kind of be behind the curve or ahead of the curve, and just by following these guys, but going to the website, by checking things out, and especially by taking part in the blog and looking and seeing all this great info that these guys release, keeps you ahead of the curve. So make sure you go to sifinsys.com. That's sifinsys.com. I'm going to spell that. It's FINSYS. So go to siphonsys.com to keep ahead of the curve with machine learning and to learn more about Quotient and the cool things that these guys are doing. Thanks.